Pat Walker here with Mission Winners. It is Sunday and once again time to dive into the ETFs and max list stocks. So here we go. ARK Innovation. You can see it started, this is weekly on the left and daily on the right, as I said, starts to lift off and takes it right back down on a pickup in volume here, okay? That's just almost like the poster child for the market as far as there's some choppy action here. What do we need to see? You see that line I drew? We need to see push through that line, stay above that line with volume. Let's continue onwards. ARK Next Generation Internet, lifted up on the weekly, lifted up on the daily. Notice this, trending up the 21-day. It's a rising 21-day. This needs to start lifting above here, but it is showing some strength, and that's good to see. Let's move on. Biotechnology. This is why I do this in Mission Winners, and I've been doing it this way for, golly, since the last century. There weren't as many ETFs, of course, all right, but they help. Here's biotechnology. Look at the trend. It's going down. It's below the falling 50-day. Here's a very good investing maxim for everybody. I've used it for years. Be careful with stuff below a falling 50-day. Well, maybe it's going to bounce. Why play the maybe game when we can stack the deck in our favor and look for stuff that's already strong? Strength begets strength. There's no real power here in biotechnology. Be careful. There we go. And again, I try to teach in these videos, not just give ideas. I want to explain why. Energy, you can see it's down here below the 50 again. And also note the rising selling volume. Needs to show some power, a pushback above the 50-day. Also, you can see this selling volume on the weekly. And please know this, again, I'm not being a bear, I'm not being negative, I'm just reporting what is. Here's the analogy. You look outside and it's raining, and I say, oh, it's raining outside. Oh, he's negative. No, it's just raining, that's all. Oh, it's sunny. Oh, they're always positive. No, it's just sunny, that's good. Although I will admit I like the sun more than the rain. So let's move on here. Here we go. Click the wrong button, energy. Let's move on here. 2, IBD 50. It's just kind of basing right here, but there's some distribution in here. This needs to start showing some power, okay? Pushing back off the 50-day. Doesn't look too bad, okay? I mean, it's still above the 50-day. That's good, but it needs to show a little power. It also fell on a slight pickup in volume on the weekly. So not a lot of strength there. Tells us just to be a little cautious. Move on. Gold miners were acting good, okay? Then they kind of dropped down here, okay? So you've got to watch this. Needs to show some strength. There's some selling volume in here too. You see the red selling volume bars? We need to see this lift off the 50-day and push through the 21-day before we get interested in it. That's simple. So this is what's beautiful. Mission Winners, this isn't fancy stuff. It's just looking at price and volume and the simple moving averages. It guides us. And we never argue with price. Oh, and this is something else I want to say. Never average down. Never. I taught this at the IBD meetups. Here's a fact. You're averaging down. You're wrong. It's below your price. Do not make yourself more wrong by buying more, okay? Please be careful with that. Gold miners kind of sloppy. Be careful. I mean, it's still above the 50-day here. This is the junior gold miners. And it's resting here just a little bit below the 21-day. Needs to show some power up there, but it is a little choppier, so be careful with that on GDXJ. And you can say, Pat, what's the setup? Needs to push through the 21-day. That's this line right here, the blue line, the 21-day exponential, and it needs to push through with volume. Till then, leave it alone. That's simple. Gold, now this one's a little stronger. Look at this, support. We own this down here. I'll just show you. See the simple bases? Look at that. Simple base, simple base, simple base. We're buying. Sold some into strength. We're in good shape. Let me do something here real quick. There we go. Updated the chart. Fell here on fairly heavy volume on Thursday and fell here on fairly heavy volume on Friday. It's just a little bit below the rising ADMA. We've sold a little into strength. It's still trending up. So we'll watch it and see what happens. It's one of the stronger ETFs right now. Gold. Let's continue onwards. Hack, cybersecurity, kind of choppy here, okay? Still above a rising 50-day. Only interest would be, a potential interest is taking out the tops of these bars right here. And I'll draw this to help you. Maybe it's going to form a better pattern later this week, but for right now, just be careful. I'm going to say it again, folks. We have an election this week, okay? And it's going to be a big thing. What's going to happen? I don't know. I'm not endorsing any candidate, nothing like that. It's just an election, a big election. The stakes are high in this respect. So something to watch. Be aware of it, okay? Biotechnology lagging, look at that. Below all the moving averages, leave it alone. Done. Now, online retail isn't looking too bad. Basing right here, IBUY, that's something maybe to watch going forward this week. You can see it ran up and it did tail off here on Friday on a pickup in volume. Needs to show some power, and I'll draw this to help you. Needs to show some power through that. By the way, it's just a simple line, folks, okay? It's not fancy. There you go. Why do we like simple lines? Let's be very pragmatic. If it's easy for you to see and it's easy for me to see, it's probably easy for everybody else to see. Does that not increase the probabilities that A, they see it, and B, they'll buy? There you go. I like that. IGV, expanded technology software, ran up, gap down here a little bit. Price gaps on increasing volume, be careful with that. The trend is still up, as you can see on the daily and the weekly. It just needs to show some power. But it is a little loose right now, so be cautious with that with software technology. Medicine's kind of sloppy here too, whipping all over the place. Needs to showing some power and picking up through there. Till then, be a little cautious with it. Mid caps kind of lagging here, be cautious. Aerospace and defense, yeah, they're what you call grounded. There's nothing there. Leave it alone. It's also telling you something. I say leave it alone. I could be fancy and say avoid it. How about that for right now? It's below the moving averages. Be careful. Watch stuff. Key on things above a rising 50-day. You'll be better for it. Home construction really dropping here. Be careful with that. Growth. iShares S&P 500 growth still above the rising 50-day, but it needs to see some power and push through the 21-day. Until then, be a little cautious with it. Continue onward. Small caps losing the 50-day. IWM. And look at the red volume bars, the selling bars. Be a little cautious with small cap. Done. Real estate, stay away. Look at that. Just leave it alone. There's nothing to do with it. Transportation, that one doesn't look too bad, but it is awfully loose here. Runs up, you get a tail bar and it drops. Runs up, you get a tail bar and it drops. Loose patterns like that. One of my degrees is in psychology, and charts are a perfect reflection of human emotions, psychology. Fear, greed, panic, complacency. And you can see it all in the charts. You can see it. Oh, it's going. Look at this. The panic buying, man. They're buying it. Oh, geez, Louise, look at this. Oh, it's going again. Oh, darn it. That's high emotions. Again, be careful with things like that. We like calm. Like, look at jets. Look at the weekly base. Look at the daily base. It was calm, right? It's just vanilla, and it lifted up. Simple. And again, calm. Maybe you think, oh, that's a corny word. No, it's the truth. It helps us. We don't want high investor emotions in the charts. Also, trends pay. Look at the trend of the AEMA. Now, there's nothing to do with it now. It's extended. But note the trend here. Trends pay more than all the decisions you'll make. That's a fact. Regional banks getting a little sloppy here, a little loose. Be cautious at this point in time. Trend is still up, but it needs to tighten up. Insurance lost the 50-day. Stay away. Done. Here's a good investing maxim for you. You will do much better if you focus on stocks that are above a rising 50-day moving average line. You'll narrow your focus down, your list down, and that will help you. Stack the deck in your favor. Regional banking, it's trending up okay, but it's loose here. Look at that. It's whippy. You know, up, down, up, down. Watch out. That's, again, indicative of high investor emotions. Just things to be cautious for. Again, on these videos, I want to give ideas, but I want to educate why. Mid-cap's a little sloppy. Be cautious. Look at home builders. I think this is such a great ticker symbol for the home builder ETF. Nail. Isn't that awesome? And this thing's getting nailed to the downside. So be careful with that. There's nothing to do with it. Also, simple lesson. It's below the 50-day moving average line. Just leave it alone. Done. Here we go. Oil services below the 50-day moving average line, the green line, leave them alone. Nothing to do with oil services. Pharmaceuticals, they need drugs. Nothing to do with it, leave it alone. By the way, that's dad humor, okay? My kids would shake their head. Here we go. QLD, just kind of chopping around here, as you can see on the daily and also on the weekly. Still above the rising 50-day. It did fall on fairly heavy volume on Thursday. Needs to show some power. Until it does, be careful with QLD and be careful with NASDAQ 100 stocks. That's good to know. Same thing's true with QQQ. Retailing is kind of chopping around here a little bit, okay? The trend is still up on the weekly and kind of on the daily, but there's a lot of gaps here. This is a good example of be careful with stocks that gap a lot. They can gap up, but they can gap down. They whip all over the place. Just be careful. But how can we use this? The overall trend on the weekly is okay, and it's okay on the daily. Maybe look into some retail. And it's still above the rising 50-day. Let's move on here. Cloud computing doesn't look too bad. Look at that. Look at the weekly. Now, what does that tell us? Hey, maybe look into some cloud computing stocks. You can punch up SKYY and find out their top 10 holdings. That's systemization. Emission winners, that's what we do. Use our time wisely. Doesn't look too bad. Now, to buy this, it'd be nicer if it would based a little longer. There's a couple of good green volume bars there, price and volume bars, so something to look into or follow going forward. Maybe not buy here, but going forward. Silver, kind of choppy here now, okay? Whipping around. These are called tail, this is what I call them, tail bars. Oh, it's going up, it's going up. Oh, they took it down. Oh, this is the start. Oh, they took it down. Lack of investor conviction with the stock. So be cautious with that. That's a great lesson right there. Focus on simple patterns. Simple chart patterns tell us that the emotions, the buyer's emotions are not wild. It's quiet. That's what we want. That's what leads to good trends. Good basis leads to good trends. Quiet basis. Steel, a little choppy here. Be careful with that. Semiconductors a little loose. Be careful with that. Semiconductor leverage. Be careful with that. Spiders down to the 50-day, bounced off of, fell on heavy volume right here. Here's a good lesson for everybody. I'm going to make this bigger. Watch this. Oh, it goes down on heavy volume. Oh, but that's a green bar, Pat. Note where it opened. Look what it ran up to near old highs here, and then look where it closed. It closed below where it opened. What does that tell us? There was selling involved in there, okay? That's good chart reading. We teach that. And again, here's the beautiful part. It's not, oh, 2 + 2 = 5. What? That doesn't make sense. It's simple. It's just simple looking at the charts. By the way, if you noticed, I have no oscillators or anything else on here. If you do, that's fine. I'm big on price and volume, studying, knowing price and volume. There we go. What's SSO tell you? That baby fell on pretty heavy volume on Friday below the 50-day. Be a little cautious there. Solar, that's loose. There's no power there. Leave it alone. Small caps, this is another leveraged one. There's nothing to do with that. Oils, it's sloppy. Leave it alone. Aerospace and defense, look at that drop here. Reversal bar here and then drop, and it's below the 50-day. Until it gets back above the 50-day, leave it alone. That, again, folks, is a great investing maxim, okay? Watch stuff that's above the rising 50-day. Be careful with things below the 50-day. That will help you. And also another one, beware stocks that whip back and forth. Look at this. That'll chew you up alive, okay? So just be a little cautious. What else does it tell you? Be cautious with biotech. And we're about done here. Here we go. Biotech. Home builders, stay away. Below the 50-day, choppy, gap down, gap down. Be careful with that. Let's move on. Here we go. Materials, a little sloppy there. How do you build houses? Well, you need, and you know, they're slipping, they're not doing too much. You need materials. Well, there's not a lot of power in material either. That's connecting the dots. Communications isn't too bad, but it's almost the poster child for the market. Oh, it's going up, it's going up. Note this bar. I'm going to make this bigger. This is a great lesson. Remember this, folks. Just because it's a green bar doesn't mean it's a good bar. And also, just because it's a red bar doesn't mean it's a bad bar. This is a green bar. Oh, look, and it moved up. Look where it opened, ran up, and look where it closed. It closed below where it opened. It closed near the lows of the day. It was met with selling. Hey, that's good to know. There we go. Another good lesson for everybody. Space out your chart, your price bars enough that you can see the nuances. You look at this and you go, God, I can't see anything. Spread them out enough that's good for you, like right there. You can see it. I think that works. Whatever fits you. There we go. Communications hanging in there, energy's lagging, forget it. Financials a little sloppy here, be cautious. Industrials lagging, be careful. Technology, drop down below the 50-day, needs to show some power, lifting off the 50-day, okay? That would be a good proxy to see. Consumer staples, leave them alone. There's nothing good there. Utilities, look at that. Stay away. That's interest rate sensitive. Healthcare, they need a shot, don't they? There's nothing there. Be careful with healthcare. Consumer discretionary, that doesn't look too bad. Just kind of basing here. By the way, when you think consumer discretionary, it's kind of defensive sector, isn't it? Consumer stocks, defensive. You got to have deodorant and all that kind of stuff. At least I hope you use it. But you can see this top right here needs to push through this with volume. Also notice, gaps up, runs up, and closes near the lows. Just because it's a green bar with increasing volume doesn't necessarily mean it's a good bar. There you go. So it's basing here. It needs to show some power above that line. There we go. Let's move on. Metals and mining, a little loose. Be cautious there. Oil and gas, stay away. Done. Retailing, no power, stay away. Software, well, that's kind of trending up. It's a little sloppy here, but it is trending up, as you can see in the chart. So what does that tell you? And I'll just draw this here. Look at that. That's close enough. There you go. It's trending up. It's trending up on the weekly. It's pulling back right now on increasing volume, so we have to wait and let the dust settle a little bit. Here's a very important point too. Please don't think you've got to be doing something every day. You don't. You don't. You can make more money with less hassle, riding a good trend, and you just let it work. Through the years, I've had many stocks, I don't even have them on my front page. I have alerts set on them, I just let them work. Okay? That's it.
Hey traders, welcome back to the Weekend Interlude, your bridge between our ETF market analysis and MAXLIST review. Before we dive in, if you're finding value in these market breakdowns, hit that like button and subscribe to stay updated with our latest insights. Let's jump into what's cooking in the markets and prep you for next week's big events. We've got elections and an FOMC meeting on deck. The economic data today is giving us some interesting signals about a potential soft landing, even with all those Fed rate hikes. Let's break down those non-farm payrolls and unemployment numbers. While we saw fewer job additions, partly due to those recent strikes and weather events, the unemployment rate is holding steady at 4.1%. That's showing some real economic backbone. Now let's geek out on some chart analysis as we kick off November. October left us with a topping tail on the monthly bar, which might hint at some downward movement. But here's the thing. With next week's major events, we need to play it smart and not jump to conclusions too quickly. Remember our golden rule. Focus on how the market actually reacts to events, not why we think it's reacting that way. Looking at today's daily charts, something interesting happened. After yesterday's bounce from Thursday's dip, we've got ourselves a harami pattern forming, typically that suggests our current downward trend might stick around. Keep your eyes on those 8 and 21 EMAs. We might see a pinch that could signal clearer direction. Given all this, I'm playing it conservative right now. Lighter positions, smart risk management, staying nimble. Quick heads up about our webinars. Whether you're new to trading or a seasoned pro, you'll want to catch these. The Q&A sessions are where the magic happens. Pat loves diving into your questions and making each session unique. So make sure to mark your calendars for Wednesday, November 27th at 8 p.m. Eastern. Yes, that's Thanksgiving Eve. Thanks for hanging out with me on today's Weekend Interlude. If you're enjoying this content, don't forget to smash that like button and hit subscribe. It really helps us reach more traders like you. Remember, whether you're trading or investing, we're all risk managers at heart. Stay smart, stay safe, and I'll catch you in the next one.
Here's Apple, MAXLIST stock. It's below the 50-day, it's falling. There's nothing to do with it. Until it starts to push back above the 50-day, we just got to leave it alone, folks. There's nothing there. So it's like, well, let's keep watching it. Yeah, we can watch it, but is it a great setup right now? You're not going to see this setup in any book, okay, saying, well, this is what you look for. This is what you look for. No. But there we go. Amazon started to gap up across these tops on the daily, also on the weekly. And on the daily, though, it gapped up, ran up, and faded on a pickup in volume. What do we need to see? We need to see some more power. We need to see this start to lift up through here with volume and stay up there, okay, on Amazon. Be cautious with things like that. If it keeps falling and you didn't sell, you'll go, why did I not sell when I had the opportunity? Okay, manage it, manage it. What's it going to do next week? I don't know, but I will share this with everybody. We have big elections next week. That is not an endorsement for any candidate, okay? I'm just pointing out it's reality. We have major elections in the United States that could impact the markets. Something just to be aware of, okay? Err to the side of caution. So there's Amazon, something to maybe watch the first part of next week, okay? After the election. Continue onwards. Alibaba, there's no real power there. I'd be a little cautious with it. But I have to show you, look at this run here on the weekly, and then it pulls back on decreasing volume, and the same thing's true here. Here's the risk with this. It's Chinese, and that's nothing against China or Chinese stocks. Oh gosh, no. But it has a lot of price gaps in it. Foreign stocks have more tendency to price gaps. Oh, it's great when it's going up, but you get, oh boy, it's going. Oh, that kind of stings, doesn't it? Okay. Be careful with stocks that gap a lot. That's all I'll say. It's basing out here. Perhaps it'll take out this top. If it does, that could be a potential buy. Something to maybe watch. But again, remember, we have an election coming too. Or also. BIDU's a little sloppier. Be careful. Google. I like how Google lifted up here. Okay. It closed near the lows, but it still was well above where it was the previous bar. All right. And then it pulls back on decreasing volume. And know what it did here. And this is a good lesson. Support right here on the 8 EMA. That's the yellow moving average. For everybody, the green line is the 50-day simple. The blue line is the 21-day exponential. The yellow line is the 8-period exponential. See where it found support off the 8? Perhaps you get a bounce right there. That's something to watch on Google in a good market. Bounce off the 8 EMA. Now, is this a clean and simple base setup? No. Is it riskier? Yes. How do we control risk? If we buy less shares. There you go. Let's move on. Goldman Sachs is just chopping around here. You can see these tops across here, and I'll draw this to help you. By the way, folks, it doesn't need to be to the penny, okay? But you can see there's tops here, here, and here. What does it need to do? Push through there. What's the negative? It's kind of loose in here. Also note, fell on fairly heavy volume Friday, and it's going to have to go up about 13 points just to get to the pivot, right? Be aware of that. That's a lot of energy expended just to get up near the pivot on Goldman Sachs. Let's move on. And again, we try to educate on these. MasterCard, look at what it does. Oh, gap up and does this on heavy volume. That's loose. Be cautious there, okay? Continue onwards. Meta. This is like a poster child for the market right here. Oh, it's going. Oh, look at that. It's going to break out. Oh, look at that. It's gapping up near those high. Oh. Okay. That's what's happening in the market right now. It will change, folks. But at the moment, just be a little cautious. There's no real clean entry here, so be careful with Meta. Move on. Microsoft. I don't think I need to say anything about that, do I? It's crummy here. Just leave it alone for right now. That's what you call a haircut in the market, in the business, okay? We don't like haircuts. Netflix. I like this pennant that's forming right here on Netflix. I'll draw this just to show you. It's nothing fancy, folks. It's right there. You got a line and you got one going across here. You know, I'll show you what the real pennant looks like. There you go. Nothing fancy. What's it need to do? It needs to push through that top, and it needs to push through with volume and a good market. The M and mission winners, the market. You need that. Continue on, but it's one to watch. All right. There's NVIDIA. NVIDIA, they announced after the close, they're being added to the Dow. Okay. This has been a monster run. Our first buy on this was back here, folks. I still remember that. Around 51 to 52 bucks a share. All the way up. Not quite a triple, but it worked out okay. You know, it's chopping up here a little bit. There's real no clean entry, but it's one to always watch on the front page with NVIDIA. Okay? Watch. And again, we have an election on Tuesday. Err to the side of caution until after all that. Block is basing right here. Here's the weekly at a downward sloping trend line that we caught. Now it's just basing. It needs to take out that top. Little loose here, some selling volume coming in Friday. Just be a little cautious. Overall, team, just be a little cautious before the election. That's it. Tesla runs up, pulls back on decreasing volume. I like Tesla, if the market's okay, pushing off the ADMA right here. That could be a potential buy. There we go. If the market's okay and the election situation's fine. These is a little sloppy, okay? A little loose there. Be cautious with that. And we go back to the top. Anyway, that is a video overview of the ETFs. And right here, the max list. Key point is this: the best setup, and I can document it, the best setup to make money, the most consistent setup, the most reliable setup, is a simple base entry. And let's be, again, very pragmatic. I say this all the time. It's easy for me to see. It's easy for you to see. It's easy for everybody to see. If everybody sees it, does it not increase the probabilities that A, they see it? Yeah. And B, they'll act on it. They'll buy. Yes. All right, team, that's our weekly review. Hope it helps you get a clearer picture of where the market's headed and what stocks to keep an eye on. By the way, don't forget about our weekly top stocks to have on your watch list video coming out tomorrow at 1 p.m. Eastern. If you're curious about what we covered last week, you can find the link to that video in the top right corner. Remember, these watch list videos are just a small taste of what our VIP members get with the daily key list videos on missionwinners.com. So if you're serious about finding those super performance stocks, consider joining us. Now, I'm curious to hear from you. What are your thoughts on today's market review? Do you have any questions or concerns? Feel free to drop a comment below. I love hearing from you. Thanks for sticking around for the whole video. If you liked it, hit that like button and subscribe to our channel. And remember, stay sharp, keep learning, and keep finding those winners.